let's take a look at what's moving, certainly macro-wise, and how it's influencing currencies and the like. Lucas Santos joining us from ACY Securities. Luca, happy Friday to you.
Good morning, Andrew.
Of course, it remains all about what comes out of Donald Trump's mouth, and that changes almost by the minute, you would think.
I told you.
But, I mean, that leads to uncertainty in the minds of investors, markets, and we're seeing that as a result.
There's a lot of things going on, actually, with Trump. And as I say, every weekend is a new surprise. We don't know what can happen this weekend. Maybe Bitcoin goes to 105,000. Maybe Bitcoin goes to zero. Maybe US dollar goes to 107,000 again. Maybe it goes to zero. So there's a lot of things, as you say, happening, and brings a lot of uncertainty. And people want to know more, but they always missing on the back end. So we always trying to know everything, but then Trump comes in and say another completely stuff, and basically it doesn't go the way we were predicting to. I think this year will be a lot of that, especially in the first year, especially on the first 100 days of Trump until 29th of April of this whole year. So a lot of uncertainties from US, and we saw the US dollar driving crazily down this yesterday. Just because of the tariffs, because of the taxes, because of Trump say something and then he post upon that, and then he comes back and then say again. And we're seeing like Aussie dollar getting a bit of strength. We're seeing the euro, a lot of strength. Even the central bank cutting 25 basis point. We're knowing that the inflation is at 2.3%, predicted to be 1.9% next year, 2026. The market is literally selling US dollars at the moment, in my view.
All right, so that you see that as continuing then, that pressure on the US dollar?
100%, yes. Yeah. Well, especially the first half, 110%. I do believe on a weak US dollar for the moment. And the Fed is not helping as well. So there's a lot of murmuring going around that Trump will make the Fed to reduce the rates faster. Forget about it. He can do whatever he wants. He can try to implement whatever he wants. The Fed won't listen to him and won't reduce the rates because of the president is asking them to reduce the rates. It's nothing to do with that. Trump can do whatever he wants. I was coming back here and I just saw that Trump, there's a plan. It's not officially measured, but there's a plan of putting zero tax on capital gain for Bitcoin. So he's a big crypto guy. And we could see that even before when he had his own crypto, So a lot of things going on. Anyways, sorry, cut you off on that one.
No, not at all. I mean, clearly the market's investors distracted by his trade policy, but also important data this week too in the US in terms of jobs. And of course, tonight we're going to get the non-farm payrolls.
Yes.
What are we likely to see, do you think?
Well, the expectation is around 160,000. And the unemployment is to be maintained at 4%, so pretty much no changes on unemployment. A little dip over on the average hourly earnings, and 160,000 already predicted for the consensus for the actual NFP. I always like to say this, right? It doesn't matter what the NFP says, it doesn't matter what only one data says. We have to watch these three data together. Average hourlies, unemployment rate, as well as the NFP. NFP around 160, 170,000. That's very arguably correct. I do believe in that. We saw the PMIs came in this week a bit hotter than what was expected. But, as I say, the data is not moving the US dollar. It's much more about the geopolitical and the macroeconomic and not the data that is coming from US. The unemployment rate will be a very special figure because the Fed has predicted to be maximum 4.2 this year, 2025, and it's now 4.0. So if we get somewhere around less than that, that's fantastic, but I continue not believing that this will make a huge move on the US dollar. I do believe that we may have a mix of data tonight, NFP around big water more than what was expected, unemployment rate somewhere around 4.1%, and then the average hourly earnings 3.1, 3.2%. That's my expectations for tonight. But again, in this scenario, I can't say, look, this will make the US dollar stronger or this will make the US dollar weaker, because it's much more in depth on the tariffs, on the actual geopolitics that is happening than only on the data points.
And Luca, you mentioned the ECB, which did cut as expected to 2.5%. We are seeing that weakness in the European economy, and then of course you consider what's going on, particularly in Germany with big spending packages afoot, particularly with defence, and we're seeing those yields rise as a result.
Yeah, we saw that, but we saw something. Just give a step back this week. We saw Zelensky and Trump having his sort of, I would say, fight. I wouldn't say on a fight, but they had his conversation on the way they had it. And Zelensky doesn't look like he wants to end the whole thing with Russia. And Trump is very, and Putin is literally wants to end it. After that, Zelensky goes home and then he comes back and he published an X saying that he wants to talk back again with Trump because he decided that he wants to do the right for the population and he can't think only on his own ego, let's say. So that's exactly what sort of driving as well the euro more stronger, because the economy, as we know, it's not going well, but what's the tailwind that is actually driving euro up and US dollar down? Most likely is, of course, the bonds and the German stimulus that you've mentioned, but giving a step back, we do have that end of the war. And if that happens, that will be very positive for the euro as well. And most likely will on the first half of this year. There are some predictions already, but I'm not too fan of those predictions because we're leading with two very irrational and we don't know what can possibly come out in the next week. So maybe Putin says, no, I want to continue. I don't want to get into a peace anymore because Zelensky didn't think about a peace on the first time. So I don't think we can sort of predict when, but most likely in the first half they will come to an agreement and sort it out the peace. The second point is, yes, the ECB did cut 25 basis points. As I mentioned, the inflation is predicted to be 1.9% in 2026. So there's a long way to go. It's at 2.2% now. We just got the releases, I think was Wednesday, if I'm not wrong, Wednesday on the night for Australia. And as well, positive, but there's a lot of the backwind on the headwinds on the economy, on the GDP, as well as people are not getting the salary revised over the inflation. So this will generate more and more problems into the future. And that's going to be more problems for the ECB to resolve. So maybe a few other 25 basis points cut from ECB would be welcome this year. And as you say, they are changing for a more easing monetary policy this year, 2025.